So, to kick it off, today we have a really exciting panel for you, which is going to be hosted by Alessandro Hatami. Alessandro comes to us as the managing partner of the Pacemakers. So please give it up for Alessandro.
Thank you. Good morning, everyone. As Joel said, my name is Alessandro Hatami. I'm the managing partner of Pacemakers. And we are an executive search firm for companies. So we help companies find the business that they should buy, partner, or engage with to build digital change in financial services. So the question I wanted to ask you today, and the discussion we're having today, is who do we think is going to be the dominant player in fintech? What market? And without underplaying what's actually happening in the rest of Asia, like Joe said, Africa, and the Americas, we are seeing three emerging dominant players in this space. And these are the US, the EU, and China. So I'd like to kick off by asking every one of you to, actually, can you get the Slido on the question? To answer this for me, who do you think is going to dominate global fintech today and in the next 5 to 10 years? Wow. Give it 5 more seconds. I think it's stabilized. Okay. So thank you very much. We'll look at this again at the end of our panel and see if you changed our minds. Can I introduce the panel and ask them to come on stage and introduce themselves? I'll let them do it themselves. So we have Michal Kissos Hertzog from Pepper, Matthew Chen from Sunline, and Melissa Guzy from Arbor Ventures. Please come on. Thank you. So, Michal, can you tell us about yourself?
Oh, I'm the first. Yay. Thanks for having me here. My name is Michal Kissos Hertzog. I'm the CEO of Pepper. For those of you who are not familiar with Pepper, Pepper is a 100% mobile bank. It's a challenger bank built within an incumbent in Israel, within Leumi. Leumi is the most actually innovative and leading bank in Israel. We have a full banking suite. We have a current account, checks, deposits, credit card, etc.
Thank you very much. Matthew?
Hi, my name is Matthew Chen. I'm the international CEO of Sunline. So for those of you who do not know who Sunline is, we are the largest core banking software provider in China, traditionally. But for the last 5 or 6 years, we've been the leading digital core banking software for China. Myself, I was born out of Shanghai. I spent quite a lot of years in Australia, so I went to university in Australia, now based out of Malaysia in Kuala Lumpur.
Thank you very much. Melissa?
I'm Melissa Guzy. I'm the co-founding and managing partner of Arbor Ventures. We're the largest fintech fund in Asia, headquartered in Singapore.
So as you can see, we have a challenger bank, we have a platform, and we have an investor. So let's ask him the question, is what do you think determines the success of a market in fintech? Melissa, do you want to kick it off?
Well, I mean, for us, it's a couple of things in Asia. One has been just the sheer size of the market. Additionally, it's been the rate of innovation. I mean, the good news about Asia is that we don't have a lot of legacy systems that people are protecting, and therefore we've seen, very, very rapid innovation in financial services, not only what's usually highlighted by China, but also Japan, all the way down to Indonesia, Malaysia, and Singapore. But what makes a great market is, one, having a need, a true need, a real bottleneck, and second of all, having a pool of great entrepreneurs. And as we know, the talent pool in Asia has only increased over the last decade.
So to paraphrase, what you're saying is creativity and talent and access to a market are the drivers.
And a need in the market, a simple need, not a nice to have, but really solving people's everyday lifestyle. We like to call it, Asia is about the super city sumer, which is we live in these mega cities, and these super apps, and whether it's WeChat or Gojek or Grab, have really solved people's everyday lives.
Interesting. Michal, do you agree?
Yeah, although I think it's a combination of all those characteristics. I think you should have, what is a success of a market? It's about scaling, right? Yeah. It's about scale. And in order to have scale, I think you have to have first technology. It needs to be robust enough, but also flexible enough in order to collaborate and partner. I think you have to have a regulator that actually enables you to work within the ecosystem, like to lay an infrastructure. And for that, I think you need to understand customer needs and pain points. And the last but not least, it's about the strategy and a vision of a company working within the market. And what I mean by that is, everybody is saying that. You'll hear this a lot, especially today. It's about understanding the customer needs and wants, and actually wanting to help them with the needs, not just think about P&L or product and how can push it to the customers, but rather think of the customer and what's their pain point and what's the job to be done, and how can I answer that. So I think that's when that's on your mind and you have the technology, regulation, understanding of the customer, you can scale.
But you also described the business, a fintech or a banking business that actually has customer at its heart, not just in words, but actually in action. So Matthew, that leads to the conversation we had earlier about what Sunline is doing and this concept of customer at the center truly, and helping them engage with a variety of providers while always thinking about the outcome for the customer. What are your thoughts about that?
I guess, first of all, echoing what Melissa was saying, that legacy, right? So it's very important, because China, unlike, for instance, if you're comparing China to America, unlike America, probably more than 80% of people having a credit card. This legacy, right? China is probably the flip side of that. There's only less than 20 people, I think only 15 people have credit cards in China. So there are a lot of so-called unbanked, underbanked people. Like Joe will put up the slide in the beginning, all the beggars using QR code on the street collecting donations, cash, right? So the legacy is definitely not there. And therefore the technology can really do it wonders, right? But all in all, it's all about innovations. Innovation is probably the key. And it's also about collaborations. You put out a slide about who's going to dominate, right? Whether America, EU, or don't forget there's also Africa and Latin America. There's a lot of countries, right?
I apologize for that.
Yeah. So
we couldn't put more panelists here. We had.
So what I'm saying is it's all about collaboration, and the collaboration needs all the parties to sing, all the parties to dance. I actually have another fireside at 12:05. Actually going to dive more into details of the platform we created. It's called Trifecta. So we're trying to bring the three parties a party together. So all the notion of connecting B2C, right, pushing the bank product and services into C, B2C, the banks to consumers, actually proven to be very, very difficult. So we're trying to build a platform in the middle. We call it B2B2C.
Thanks, Matthew. I cannot put much advertising in this.
Yes. Sorry. So I'm just trying to say that it takes a lot of parties at play. Okay. To collaborate, right? That's really the key.
All three of you touched on the concept of regulation and how China, as we all know, has a relatively well-coordinated regulator or regulators that do believe in a vision. And then you have the Americans at the other extreme that are regulated by 50 states. They are not always aligned. And then you have the Europeans. There are 28 states, but are increasingly aligned by regulation of the EU. So we have seen PSD2, we've seen GDPR, etc., which in fact is dragging the rest of the world. What are your views about that as an asset, looking at regulation as an asset rather than as something you have to comply with? Melissa, do you want to?
Well, I think we're going to be in a world of regulatory arbitrage, actually, and I think you can see that governments are actually competing with each other for attracting fintech to their region or to their country based on some regulation. We've never seen regulation as impediment. We've always seen actually the regulators, at least in our part of the world, to be quite helpful. And I think we're starting to see a lot of interaction in ASEAN, particularly when you mentioned the QR code. We're going to have a QR code payment rail that's completely interactive. Where today it's interactive between Thailand and Singapore, and soon Indonesia, and the Philippines will sign on. that will be a single system that can actually accept QR codes across the region. So I think regulation is always something you deal with in financial services. Never in my mind has it been, a hindrance, but I do think there is some amount of regulatory arbitrage as you talk about blockchain or crypto. But I think you're going to continue to see more and more cooperation and collaboration, especially in Asia among the governments with financial services.
What do you say, Michal?
I think you should look at the regulation as an enabler. I know most of the time we see it as a burden sometimes, but for example, in Israel, we actually worked with the regulators in order to push more innovation because they want that, right? Not usually they do it, but they want that. In Europe, for example, you see PSD2, you see GDPR, you see open banking and everything. But the thing is about how you think about it. And I think that's the really main challenge, and that's the difference between traditional banks or incumbent and challenger banks, because as a traditional bank, you think, oh, there is an open banking regulation, what can we do with that? Or as a challenger bank, you think, oh, my customer has this problem or this pain, and now open banking can help me with that. So again, looking at regulation for me is an enabler. It's not a mean to an end.
And that's possibly true in certain markets that we've seen it. I think as you mentioned, the Singapore market earlier, we were talking that is very proactively almost forcing the challengers and the incumbent working together. We've seen the FCA actually creating sandboxes that are now being replicated across other regulators. And the European banking regulator, they are actually pushing certain things, certain catalysts to deliver change. What's happening in China, though, is that there's an extreme coordination between the different regulators, which is making it a lot less risky and difficult for companies to actually worry about regulation, but at the same time, doesn't make them more exposed to risks if they're not regulated as heavily as some of the other markets are. So, Matthew, you're very engaged in the Chinese regulatory market. So, what are your thoughts?
Yeah, I mean, regulation is always, one of the most important pieces in financial sectors, right? But I think China, unlike probably the rest of the world, instead of having a smaller sandbox kind of approach, it actually mandate the whole country as a sandbox. Because you don't know what you don't know, right? How are you going to regulate innovations ahead of time? You can't, because you simply do not know. So what China did is so-called, it provided a blacklist and a whitelist approach. So initially, before the so-called, in the sandbox approach, as I said, the whole country is a sandbox, right? You only provide a blacklist. Only those list of items is a big no-no, you cannot do. That means anything else you can do. There comes innovation, right? And then when the dust starts to settle, the government step in and try to issue licenses, right? And then provide a whitelist. So only the things that on that list you can do. It's try to prescribe. So that's probably the approach that China has done sort of differently from some of the other sandbox that we have seen around the globe.
So extreme pragmatism is the answer you're saying there. One of the discussions that we had before about which market will dominate is the market that has less legacy to deal with. And if you think about the American banks and the European banks, they have been doing banking for a very long time. And they have these assets that are sitting there that will make it potentially more difficult for them to innovate and to adopt the new. China obviously has a lot less of that problem. Do you think legacy is, in the existing of a banking infrastructure, an asset or a challenge? Or Michal, what do you think?
Of course, it's a challenge. I mean, again, going back to my example, I always like to use that. If you have like a traditional app and a challenger bank app, and like you pull up the facing of an app, so beneath a traditional bank, what will you see? Like a spaghetti of things. Everything is like complex. You're like touching this, infrastructure. You're touching that, and in order to launch a product, that's like 9 months work. And well, in a challenger bank, when you pull up the facing of an app, what do you see? A nice lasagna, clean,
I like the Italian connection.
Right? Even though we talked about it, spaghetti was invented by the Chinese.
But let's not get there.
Okay. So I mean, it's a metaphor to make you understand how legacy can. Yes, of course, it's a challenge. That's why, by the way, Pepper was built within different infrastructure, different from the traditional one, in order for for us to be more agnostic to change and flexible and so on. So the quick answer to your question is yes.
Is yes. And Melissa, what are your thoughts about legacy? Is that an asset or a liability?
Well, I think, say that, what's the question again? Because like, we got lost in it.
Is legacy an asset?
How can we ever think that legacy systems is like...
Well, because legacy of systems also leads to legacy of customers, and it leads to the customers trusting the legacy player, and therefore potentially creating a situation where the legacy player has an advantage of the incumbent because they have the customers.
So Matthew and I were talking about this before we came on stage. Here's what the world's going to wake up to and realize in about 3 or 4 years, and maybe 5, he'll take the rest of the world. China, what the Chinese companies are doing is they're going down to Southeast Asia, and they're going to go to the old banks, like a bank in Vietnam who's got this old infrastructure, and say, fine, keep running it on the old legacy infrastructure. We're going to set up new infrastructure. It's going to mirror transactions every single day to the old legacy infrastructure, but you're not going to pay us no $85 million in no months. We're going to do this. We can do this in a couple of weeks, and we're only going to get paid on new account openings. And the world in a couple of years is going to wake up and go, wow. And so will Temenos and Jack Henry and FIS wake up and realize this. So legacy is only a problem if you allow legacy to be a problem. But legacy, in today's world of new banking stacks, you can run them side by side and mirror the existing legacy system.
Yeah.
So it's all in the mindset of the CEO of a bank. And soon we'll stop calling them challenger banks and just realize they're our next generation, they're our banks. They give me my financial accounts, they're online, they're easy, they're digital. I don't need to talk to human beings unless I really desire to. But, we're just going to move to past this point of referring to legacy, at least in Asia, because it won't matter very shortly.
But it's not just it, because having a digital skin, everybody can do that.
It's not a skin.
But no,
it's the full stack.
I know. But even over legacy, and I don't think that the value proposition of I don't like the word challenger bank as well, but I think it's not only having a digital app or a loan or a deposit. It's not just it. I think it's a different value proposition. I think we spoke about it before. When a person goes to sleep at night, they are not thinking about the mortgage they are going to take, right? They are thinking about the house they want to build or buy. And in order to do so, your value proposition needs to be different. It's a different financial value proposition than today. It needs to think, okay, how can I help this person accumulate enough money in order for him to buy their house? Or how can I help them finance their life better? Or how can I help them, do this and that? And I can have several of examples, but it's the different concept of thinking about our customers.
It's true, and the Chinese obviously are doing enormously better than the rest of the world and actually thinking of customer outcome rather than selling them product. That said, there's more people using digital banking in the world in Europe than anywhere else in the world. So, something's got to give. So you're saying theoretically you're absolutely right. In practice, the Europeans are ahead of the game by digitizing the existing.
You have to do that. That's for sure.
But it's also a matter in Asia whether this person never had a bank account. Your Grab driver, your Gojek driver, they never had a bank account.
That's true.
So for the first time, what's a bank account to them? I don't know. Mm-hmm. What they have now is a way to pay digitally. And they can now participate in the world of e-commerce. And they can now pay for things, not using cash. So it's a complete lifestyle change as the shift.
It's to live digitally.
Exactly.
So do you agree with that?
Service everywhere, yes.
So you're saying there's no legacy because there's different infrastructures?
It's completely different infrastructure for a new group of people that are coming into financial, I hate to use the word financial inclusion, but it's people who can now participate in a very different way.
Yeah.
And that's just a different situation than in Europe or the US.
So we've spoken a lot about China being so amazing and dominating everything. We said that Europe is doing okay in the background. We haven't said anything about America. But let's not forget that America has the deepest capital markets. They're investing in fintechs. It has a very large part of their population that are digitalized. And they have a huge talent pool that was driven by other types of digital activities, from the big tech companies to e-commerce and so on and so forth. So is the panel thinking that we can forget about the US supremacy in this space, or do you think the US somehow will be able to crack through the fintech challenge of having so many regulators, having such an unfriendly banking world and adopting digital? Matthew,
I think at the end of the day, it's about mindset, right? It's very important. The whole digital transformation is all in here, right? Because see, the reason why China is becoming, catching up at least, right, is because, legacy. I think lack of legacy plus a large unbanked population, plus technology, definitely is a secret, it's a success recipe to make China to catch up so quickly. But legacy not necessarily is going to be a problem unless you make a problem. Exactly echoing what Melissa's saying, right? It's all here, it's all mindset.
So we talk about legacy. You talked about technical legacy, but I think the real challenge is
culture
mindset.
Mindset.
Legacy.
The banking culture, right? They talk about traditional bankers' mindset.
And do you think, Michal, that what we call challenger banks in Europe understand this? And are they actually cars, or are they faster horses, to use the Ford example? Are they really trying to innovate banking by creating something that is a transformation, or are they just adapting an old model to a new technological capability?
I think you need to look at Europe. Are we answering Europe or the US?
We skip from US, we're not going to see...
Because we're not US.
Okay, go back to the US.
You see that the Europeans, number 26, Monzo, Pepper, all of us, we look at the US. Of course, it's a market you can skip. It's too big of a market to skip. But going back to Europe is, I think what you see in Europe is you have a lot of challenger banks. By the way, that they weren't there like 3 or 4 years ago. Okay, so the exponential change in banking industry is it's mind blowing in my mind. When we thought about Pepper like 4 or 5 years ago, we looked at different banks that they're not relevant today anymore. So that's crazy. So what do you see there? That now the incumbents are actually trying to react to a changing market because they didn't lead it. In Israel it's pretty different because we led, Leumi and Pepper led the market. We changed the ecosystem because we were the first one to launch a challenger bank because we rather cannibalized ourselves than others. But in Europe, for example, you see now, RBS and NetWest are trying to launch Bow because Monzo and number 26 and Revolut took so much of their deposits. So that's why that's why US in that aspect is challenging, but also an opportunity because they're not,
Absolutely. By the way, if you have any questions on Slido, you can post them and I'll pick them up if I want to do. But I think one of the things that I wanted to bring up is that European banks going into the US have not had it easy. So if you look at fintechs that have gone to US, Stripe has done really well because it's in payments. And payments is, yes, a fintech, but it's a relatively less complicated environment. Look at the likes of Klarna and a few others are there. All the big fintechs in the UK have said that they are moving to the US. Number 26 has announced that they're looking at the US. But are they going to be able to navigate through these 50 regulators in a way
it's hard. You see Varo Money, you see Chime, it's hard. They're using license by other banks. They are trying to get their Varo Money, for example, trying to get their own license. But it's challenging, but it can be done.
Okay. I'll pick up one of the questions here, just throw some controversy into this discussion. Do we think that the current trade wars that we're seeing between the US and China will affect the potential of Chinese companies to be able to engage in more advanced other markets like the EU and the US because of politics rather than technology and capability? Matthew?
I thought we're not talking about politics on the stage.
I tricked you, I'm sorry.
Well, I mean, I'll take this one, Matthew.
Yes, you go.
But I mean, let's just talk about the trade war and the implications on China, because I think we have to realize that the U.S. is actually, I am an American, but the U.S. is the third largest trading partner of China. The first is the rest of Asia, the second is Europe, and the U.S. is third. And I think what you'll see is implications are that we've seen is that Chinese companies will continue to focus on Southeast Asia and their friendly trading partners to continue the expansion. And, perhaps the U.S. will sit over there for now. But I don't think it will stop the growth of the Chinese technology companies to perhaps redirect their priorities of growth.
So in a funny sort of way, it could actually be a way of refocusing in a market that's actually more receptive to the Chinese proposition. So thank you very much on that. I think we need to close. I'm getting waves there. I just wanted to go back to the questions that we asked at the beginning, the slider question, and see if there's anybody's changed their mind. This is what we had before, and we unfreeze it, and actually we can start revoting now, please.
There should be an answer saying other, like collaborations. It's not about the specific market, it's about collaborating within players within different markets. Then ask them.
Exactly. It's not about competing, right? It's more about collaboration.
So what's interesting in the difference is that the US has gone further down. China is still dominating, but the EU is.
You see, other is growing.
Other is growing. It should do. It's absolutely right. Thank you very much.
A big thank you. Thanks, guys. All right, a big thank you to our panel there. It's rare you get an investor, a business, and some middleware all on one panel. So one of the things that I'd just ask you to do, guys, I think it's really important to ensure that Money 2020 keeps this high level of quality attendees and people on stage. If you can take part in the Barclays survey. So if you go to your Money 2020 app, there's a section in there. I'd recommend you all fill it out just to make sure that we keep getting the right people up on stage.